Hello and welcome back to another video. My name is Justin and today we're going to try to understand WTF. What happened in the market? Why did we reverse yesterday's entire move and actually give up more? We see massive volume here with QQQ closing down by over 5% and the S&P is closing down by 3.5%. So as we look here to the heat map, again, the joke here is that this is a decline that we've not seen since as late as last week. So last week, again, as early as last week, we saw a decline that was roughly in line with where we are, again, on a closing basis. However, the intraday volatility is definitely rocketing, and the total volatility, again, excluding last week, is not something we've really seen since June and September of 2020. So we're basically back to the lockdown trading where, again, there is tremendous volatility. Right now, it is to the downside. So I think what happened is what we tried to explain yesterday, and again, I encourage you to go watch that if you want to know exactly what we thought in the moment. But I think that the prepared remarks that Jerome gave were what he wanted the market to receive as a message. And then what he talked about during the Q&A was him winging it. What he wanted you to hear was what was in the initial prepared remarks. And what he said is that we're not going by 75 next meeting, but we're planning on going 50 for basically the next 3 meetings, maybe even 4. And by the end of the year, we're going to still be at the same level we were before we started talking. So that was a relief rally, and it just got reversed. It also appears like it's very synchronized, and I'll just talk about, again, looking here and seeing what S&P and QQQ are both doing. So right now, SPY closed at 413.81. QQQ closed at 313. And again, they've been synchronized almost to the cent for a large part of the day. Looking at the low here at QQQ, it's 309. Looking for the low here on SPY, it's at 409. So what does that mean? Although we may not be happy with what we are seeing on the screen, this is a it is not a hard sell-off. This is actually a, again, this is a orderly, that's the word I was looking for. This is an orderly decline. Yeah, it's an orderly decline with, right, BTC down by, right, orderly. Oh, yikes, that's a scary word, right? So we got, right, SPY down by 3.5%. We got QQQ down by 5. DXY up by $1. VIX back above 30. We've got Bitcoin as of right now down by 8.5%, Ethereum down by 7, gold treading water, TNX back above 3. It's at 306 right now. That means the 10-year note is currently yielding more than 3%. Oil back above 108 here, and the put and call ratios are pretty much just leveling off there. But this right here is what I think Jerome wanted as his reaction yesterday. In the market either didn't want to hear it, is only catching up now. But what we have to ask ourselves is, does it really matter the reason why we're this red? No. What matters is, this is where we are. This is the reality we live in. And like we talked about yesterday, volatility is going to be a trader's paradise, but it is an investor's hell, which means that if you're trying to trade, there are huge ranges right now. There are terrific trades setting up there. And if you are someone trying to invest, this is very hard to stomach. It is incredibly difficult. And what I would also mention is that if you are today watching the video, I want to congratulate you because it is not easy to tune in and see what's going on today. But now let's look at some charts. And actually, before we do that, again, do I have to mansplain everything that happened? Not really, but the BOE today held interest rates flat at 1%, and they pretty much said the stagflation, right, with capitals. And then we saw that productivity growth in the U.S. was a little bit soft. So when we're not seeing what we want all around the world, we're getting a very sour reaction here. So, right, the BOE moved the dollar higher. ECB pretty much said we're not planning on raising rates anytime soon. At the open, we were at about 46 in fear. Then we pushed all the way back down here to about 32. Market's scared. And what we have to ask ourselves now is, if we are trying to trade, to catch short-term trades, again, are we trying to go upstream or downstream? And same thing when we're investing. Trying to think about different ways where I can give you an analogy for what I think people are doing in the market versus what they should be doing. So again, you have to think about, when does a fish actually go upstream versus downstream? Fish go upstream at the end of their life cycle when they are trying to go back to where they spawned to lay eggs and then die. And have to ask yourself, so what do you want to do? Do you want to be in the easy part or the hard part? The easy part is going downstream. Why? Well, it's dragging you down. And trying to go upstream is going to be difficult. And if you can do it, I'm not telling you not to. I'm just asking you, is that the best use of your energy, meaning your money and your time? If it isn't, right, it's nice to show people you can jump up and do these cool big moves, but is that what you really need to do? I don't know. And that's why, even if you're trying to stock pick right now, again, you're like, oh my God, I can't believe that Tesla's down by 8. I'm going to buy it here. I'm not telling you not to. Just ask yourself, am I fighting the upstream move where, again, the Niagara Falls or the S&P, is it currently flowing down or flowing up? And yes, some stocks, like today, there's a couple of pockets of green, right? We see them here. We see Twitter, whatever this is, Charter Communications, Kellogg's, right? Bookings, but is it going to hold? I have no idea. And that's where you have to, again, ask yourself, am I trying to be a superhero right now? Maybe I'll be successful. Is it going to be temporary? Yes. Eventually the fish will have to swim. He's going to have to find a period or a spot in the lake where the water is either calm or he's going to get pulled back down. And that's what you have to think about. Where am I going to take a rest in terms of your money? And for sell in May and go away, how long am I willing to hold on for? Because when we look back now at the weekly chart for these for S&P and for QQQ, they're actually green. Yeah, they're green. Not by a lot. Might not feel like it because what we talked about yesterday was as good as it feels to make money, feels a lot worse to lose it. And if you move the goalpost, that's where you're probably feeling very humble today. And again, like I said, if you're not sticking your head in the sand and you're actually tuning in, it means that you are going to learn from this. It's a failure if you don't learn from this. It is a lesson if you, again, avoid this next time. You're not going to be perfect, but can you learn from this to minimize the losses next time? And if we're flat on the week, but you are, again, losing your shirt, you have to really try to find out how you got here. Part of the journey for the stock market is not just knowing what to do, it's knowing what not to do. It's knowing when to sit on the sidelines, when to sit on your hands, when to let the price action unfold and then let it prove to you what's happening. And for me, that means waiting until the Friday close. And again, as of right now, this is a massive doji. We're up here on SPY by 0.44%, right? Not a whole lot, but it's green. Looking at QQQ, we're down by 25 cents or 0.08%, 8 bips. We are, again, this is not a nice candle. There's still one more day left, and we are still in that bear market territory for QQQ by being down here below 20%. But we're basically where we open up on Monday, opening at 312, and we're actually closing out higher here than where we open on Monday. If this was Friday, I would say, hey, price discovery higher, engulfed the previous candle by a couple cents, and then came back down. Isn't that constructive? It depends. And looking at SPY, same thing. So we're now inside this pocket here where we are battling for the relative lows, and we are in that -10 or correction period. So again, is this a dead cat bounce before we go back down here? I don't know. And right now I am pretty much idling, which means that I am waiting until I get proven that we are bullish. And right now I am not seeing that evidence. So again, we talked about, again, going upstream when maybe we shouldn't. And I could show you options. I could show you what's going on. But I think that everyone kind of knows. Again, like I mentioned briefly before, does it really matter why we're down? Oh, well, Jerome said yesterday, don't fight the Fed. It's why I left you with a question of, do we believe this? And for me, I've changed my criteria for what I believe and what I don't. For me to believe the price action, it can't just be for 2 hours. It has to hold for quite some time. So there's a couple things I want to go through, but I also don't want the video to be like super, super long. So let me do this here. So I'm going to share this link in the description. This is from Ray Dalio. So again, not that Ray Dalio is the end all be all, but he is the the hedge fund that has returned the most capital to investors ever, which means he's not generated the highest percentage return, absolute, but he's generated the largest total dollars, which means this guy knows how to make money. This guy really knows how to make money, right? Billionaire in his own right, and one of the smartest people that I respect. So when he shared this yesterday, paid attention to it. Why? He's confirming a lot of what I already believe. So when smarter people than me see what I see, it tells me that, hey, Maybe we're early, but the people who were usually early are seeing the same thing I do. Here he's calling this the popping of the bubble stocks, right? An update. So what I want to focus on here, I'll encourage you to read the rest of the article yourself because it's a little bit lengthy, but there's nice graphs in here. If you like graphs, they're in here. I'm going to try to dig through this a little bit more, and if it's relevant, I will bring it up to future videos. But what I want to focus on here is just his checklist. So I define a bubble market as one that has a combination of the following in high degree. So ask yourself, how many of these boxes are being checked right now? There's 6 of them. So the first one here is high price relative to traditional measures of value. Example, by taking the present value of their cash flows to the duration of the asset and comparing it with their interest rates. If that sounds convoluted or you're like, I don't understand, just listen till we get to the end. Unsustainable conditions. Example, extrapolating past revenue and earnings growth rates late in the cycle when comparing limit means that growth can't be sustained. Like Peloton saying that, oh my God, the last 3 months we've grown by 1,000,000%. So next year we're going to be at right, unbelievable revenue rate. We're going to be profitable. We're going to be gushing cash. And nope. Think about Netflix. Think about Facebook. Past performance is not a guarantee of future profitability. So number 3, many new naive buyers who were attracted in because the market had gone up a lot, so it's perceived as a hot market. Yes. Broad bullish sentiment. Yes. A high percentage of purchases being financed by debt. Yes. A lot of forward and speculative purchases made to bet on price gains. Example, inventories that are made that are more than needed. Contracted forward purchases, etc. So for me, all these boxes are checked. And that means that, again, we're probably going to be going lower. How much lower and whether it will continue to be, right, what did I call before? I'm missing my words now. Right, not a hard sell-off. It's a synchronized, right? It's synchronized. When I look at SPY and I look at QQQ and they're both doing the same thing, it's because they're in control of the charts, right? Even in after hours here, roughly 314 and SPY roughly 314, which means it's orderly. That's the word I was looking for. It's an orderly decline, and we're green on the week. So if that's the case, now we have to ask ourselves, if these big leaders are now leading us to the downside, is there any technical damage that's been made? So if it's orderly, again, where is the disorder coming? Because the only way we're able to get SPY at 414 and QQQ at 314 is that they have to know which stocks they're going to sell off to hit those numbers. And right, if we look here at the close, nice round numbers. Microsoft 2775, Apple 1565, between 150 and 157.5. Google, right, 2330. Facebook 208. Amazon 30, right, 2328. Tesla 875, right? These numbers are pretty close to round ones because they're exhausting themselves. They're getting to roughly a strike where there's going to be puts and calls, and that's what's happening. So now let's look at some charts, because you're probably wondering, like, WTF, how are we green in the week? It doesn't feel like we're green in the week. Yup, because we went full circle from that 414 slingshot all the way up and then all the way back down. And if you are looking at only short-term price action, you're probably missing the story. And we can clearly see that here by looking at the hourly chart on SPY. And here we can note that the trend has never changed. It's just the emotions that have changed. Ever since we had this high staged here in late March, we've been in a very steady decline. And we spent a brief period below the trend, came back above, fell back below, and came back above. And the close here is just a short cover rally. So they're trying to only have to buy at the very last minute. And I'm talking minutes. They're literally buying at the last minute. Why? They need a certain printed close to avoid paying out the puts. So sell the puts, burn the puts only by the close. And that is what a bear market rally is defined by: a strong open and a soft close. That's exactly what we see here. We are respecting the funnel. So even though we got really close, we did not break that 432 area. So on the hourly, we've never been given a buy signal. We had the potential to bounce off this uptrend right here when we landed at the neckline for the IHS. Again, head, shoulder, shoulder at about 416. And that buying is very powerful, but again, it's largely right there in the last minute. 6 million shares traded in 1 minute, and the last 10 minutes is 20 million shares. That's a lot, which means that they're only buying because they have to, not because they want to. On every other time frame, again, it's just damage. So, right, we look here back at SPY, doesn't look all that great. Where we're going to be by Friday is going to determine how we close this weekly chart. And right now, right, we poked above. We technically got that higher high by 2 cents here on SPY, but I don't know. And the volume's already really high. So if people are buying and now they're trapped, we're probably going to take that leg down to 400. And if this is what an orderly decline looks like, you're not going to want to be around when there's a disorderly decline. We were able to suck up off the lows, which means that we could still gap down tomorrow, but not sure it's going to, again, there's not as much pressure building up here. The other really interesting thing too is just that, again, we were looking for the potential for 3 white soldiers overnight, but right at the open, there was no strength at all. Again, if we're going to form soldiers, we have to gap down and rally up immediately, no lower wick. And SPY and QQQ were already synced up, and it didn't really happen. So where we're going to be by Friday, I'm not sure. But we do have to get back above 425, roughly 422 as a starting point to reclaim that downtrend. And we cannot take away the touchdown that was scored from the Bulls. But again, they won this week and we are green. The question is, who's winning for next week? Is this a one and done? So, right, we get 1, 2, 3, 4 back-to-back big weeks for the Bears, and then one snapback for the Bulls, and that's it. We gotta wait and see what's gonna happen. Looking at QQQ. Again, looking here on the weekly chart, we are right now to, if we're red on the week, it means that we're also below our monthly low, and we have tremendous selling pressure building up here. Inverted hammer, this is screaming to go down. If we close here on Friday, this I would say, yeah, wants more down. Looking for new lows. Looking over here at Apple now, our leader. Weekly chart. So again, still technically above the 50 MA. It did reject. It looks like a hard rejection off 165 now, which is going to be the upper trend line here. And still trending up, still above the 50. Definitely got hurt today bad, right? Down $9, 5.5%, but technically no damage on the chart. Tesla. Green on the week, right? Elon just can't not lose, right? Can't not win, sorry. Still green on the week by $2 or 0.29%. Just got stalled out here at 955 for that gap and just came back down. Technically still above the 50, technically trending up. It does not hold on by a lot, but it's right there, just like Apple. Now let's look at Microsoft. It just looks like it's, again, same thing as last week, right? Price discovery, higher, sold off. Actually, the last 3 weeks now. Goes up, sells off, goes up, sells off, goes up, sells off. So higher high, higher low. Range, the true range is still below 280. Every time above 280, sold off. So got to see some follow through though. Volume actually looks a lot better here too. GOOG. Up by 1.5 on the week. Same thing, right? Price discovery up, shoots down. Price discovery up, shoots down. Price discovery up, shoots down. Below the green line, hovering right around the lows, trending down below the 50. I don't know, mixed signals. NVDA. Basically the exact same thing. Below the green line, right around the lows, below the 50, trending down. I don't know. I'm not sure, right? Mixed signals. Bearish though. Facebook. More bullish than the others. It stopped going down. That's a start. And it's green by 4% on the week. Woof. Even by even down $15 or 6.7%, it's still green on the week. Not bad. And then what are the last ones we got to look at here? Amazon. Ugh. Oof, right? That is a bear rejection off the 200 weekly MA. That's bad. This is just looking like bearish follow through. It's right at the low of the week here, which means there's still pressure building up. I would say that we're probably looking for somewhere around 2,000 as the area to find some relief on Amazon. I think that's it. So longer video than usual, and the last couple of videos have been a little bit longer because, frankly, I think that there's just a lot going on. And normally the summer is going to be a quieter period, which means that this is an orderly decline, and at a certain point it will become disorderly. People are getting margin calls. People are blowing up, and the question is again, do you want to be that trader or that investor like we talked about yesterday? And then if and when you want to trim, now you're probably like, man, I shoulda, woulda, coulda. Don't do that, right? Shoulda, woulda, coulda just means that you're hung up on the past. Ask yourself, what can I learn and how can I improve for next time? That's it. With that said, if you want to watch more, we have a video which will queue up here, which is going to be our bear market of 2022 2.0, which walks you through the bear thesis for what could happen for the rest of the year. Thank you very much for watching.